Hello everybody, welcome to the technical analysis webinar with AvaTrade. My name is Troy, I'm a senior account manager. I'll be leading the session. As we get going, let's do a quick systems check. If you would, just type OK in the chat box and let me know that you're hearing things okay and seeing the screen clearly. All right, great. I've got enough responses. Thank you. Looks like we're up and running fine. If anyone has any issues as we go along, please let me know. So the focus today is technical analysis. We'll take a quick peek at the fundamental news that's going on. So you might have a preference on what direction you want to trade with your technical analysis. It's not too complex today in terms of the fundamentals, so it makes it a good technical trading day. With some pretty big news coming later today to drive some potential breakthroughs. As we get going, keep in mind that, as always, there is risk involved with trading. There's no guarantee of profits on any one trade, but certainly each and every trade you take has the potential for nice profits. And so it's all about timing, risk management, and strategy to try and come out on top. So it makes sense in some way to manage your risk, whether you're using stop loss settings, hedge positions, or maybe using AvaProtect, which is available on our web trader platform and our AvaTrade Go mobile app. It's a special feature for managing risk for defined time periods, which we'll take a quick peek at. As we go over the concepts and information, keep in mind that it's not to be taken as financial advisement, but is coming from an educational perspective. Now, in general, what is technical analysis? I know we have some new traders and also experienced traders in the webinars, so I think there'll be plenty of information for both. So I would say all of you should stick around for the session. We'll be on the live charts very soon, working strategies. Now, basically though, what is technical analysis? It's looking at the historical movements on the charts, the price movements, trying to find patterns that maybe indicate predictable movements in the future, right? So there are different ways to go about doing technical analysis. In general, we stick to manual methods of technical analysis in the webinars that I do, meaning we're finding our own price levels. We're reading the candlesticks kind of like music notes, looking for where does the tempo change? Where does the price find support or resistance? Where does it break through and go to a new level? And just breaking things down that way on the charts to find what may look to be opportunistic entry points and exit points, okay? And then the other way of doing technical analysis would be by using indicators. And so probably all of you are aware of certain indicators that you've utilized or seen used, whether it's the RSI, stochastic indicator, the Bollinger Bands, Fibonacci levels, etc. And there are literally hundreds and hundreds of different indicators that you can utilize. Pretty much each and every one of them are looking at the same thing that you look at with your eyes on the charts. They're looking at the historical movements, counting back a certain number of candlesticks and reading the price movements and telling you whether the current price is overbought or oversold. That's the idea of most indicators. And so whether they're visually showing you lines on the chart or a picture of some sort that tells you that something's overbought or oversold, this is what indicators are doing. They're reading the charts like we can do manually. The advantage of the manual methods would be you can adapt to the fundamental news situation. You can understand that maybe you prefer trading up from a support level rather than down from a resistance level if the fundamental news is good for the Nasdaq, for example. So an indicator typically is not able to know what is going on with the fundamental news. They don't know that there's a stimulus package about to be released in the US potentially. There's no way for an indicator to know that. And so if the movement keeps going up, an indicator might tell you, okay, now it's time to sell. Whereas if you are following the fundamental news, you might prefer to plan for a breakthrough of a resistance level and continue to buy, for example. So indicators are helpful. They can help you know when something is potentially overbought or oversold, but the manual methods I think are very important to understand because this is where the information's coming from in the first place, okay? If you have any questions or input you want to give as we go along, please go ahead. I encourage you to participate in the dialogue, give your ideas or questions as we go along. Now, where I like to start the webinars would be on our website. So it's important that risk management is part of your trading, or at least I believe it's important to have a risk management plan. So a way to manage risk is to have tools that help you to do that. And so with AvaTrade, we've built our own platform called the Web Trader, and we've built our own mobile app called AvaTrade Go that really have great risk management tools built into them. And those are features that are good for advanced traders and also for new traders, because even for an advanced trader, why should you have to calculate your exposure per pip to your stop loss and take the time to have to do that? Sometimes timing is everything, and you want to get your trade up and going, and you don't want to make a mistake or rush your exposure calculations or your potential profit calculations. And so with that in mind, to make things easier for traders, we build our own platform, our own app. And you'll see what I show you on our Web Trader platform here in a moment is also on the app. You'll see the same features, Ava Protect, the take profit, stop loss features where it calculates exposure for you, etc. All of that's on the mobile app as well, and you can find it here on our website to download from your app store. Now, when you log in from up here on our main website, you should see this platform, our Web Trader platform. The Web Trader platform, if you've been with AvaTrade, say for a year or more, perhaps you don't have it active on your account because the Web Trader platform was launched within the past year. So older clients who've been with us for years and years, and we've been around for a dozen years or so, if you don't see this platform when you log in from our main website, if you're directly in the client area instead, then ask your account manager to have the platform added if you'd like to use it. It trades right on top of the MT4 and MT5 account, both our mobile app and this platform. They don't make it so you're trading on a different account or something. Whatever trades you do here, you will see on your MT4 and MT5 accounts, and vice versa. Okay. Now, real quick, the risk management stuff. If I want to click on gold, silver, or FX pairings, you'll see Ava Protect as a feature. All the other features are on all of the instruments. Okay. So let's say I think the weakening of the USD will drive gold up more. Perhaps I think there's more inflation to come with expected near $2 trillion more of stimulus maybe coming from the Biden administration in the US, which certainly causes inflation of a currency, which would be weakening of a currency, and gold being an inflationary safe haven typically. Maybe you expect, based on the fundamentals, gold to rise. And in a minute, we'll look at the technical analysis for gold and see what kind of entry points might you be interested in, if indeed you think gold should rise based on the fundamental situation. But let's say you're placing your trade on gold, you do your technical analysis and you say, okay, I know I want to buy right now on gold. And so you click buy and you say, okay, I'm gonna put my take profit down at below 1840 maybe, or 1830, wherever you see a support level that maybe you think, okay, I don't think gold will go below there. And so you program your stop loss at a certain price based on the technical analysis. And maybe I say, I don't think it should drop below 1840 if I'm correct about the movement. And perhaps I decide I want to trade with, I don't know, 20 ounces of gold, which would be 0.2. And maybe I want my take profit at 1900. Maybe I believe it's about to go up to, or maybe 1950, which is kind of an important price level as we'll look at gold here soon. And so maybe I decide 1950 is my mark. And then I take a look and I say, wow, potential profit, $1,600. And by the way, this converts to your account currency. converts to your account currency. So if you're in pounds or euros, it'll tell you your possible profit in your account currency. So calculating my potential profit based on my trade size and my take profit price. Also calculating my risk based on my trade size and my stop loss price. Maybe I look here and I say, whoa, 588, that's like a third of my account balance. Maybe I say, it's too big of a risk. I like the potential profit, but it's too big of a risk. We've got European Central Bank with stuff going on today. We've got the Biden administration signing all kinds of executive orders now today. And we've got big news over the next couple days potentially. There are major announcements coming out of the US as well today. So maybe you say, you know what, I don't want to risk so much if gold plunges to 1840 right now. So instead of a stop loss, maybe I'll use AvaProtect. And I'll say, okay, let me protect myself for 6 hours, 1 day, 2 days. 2 days protection, I'm risking only 226, meaning that's the cost of the premium. Then I have no risk for 2 days. Gold could plunge $100 an ounce. I get paid back when my protection ends. And then I can continue the trade. I can let it run. Maybe if it even then went halfway back up, I'm in overall profit if I make back just the small premium cost. So now you look and you say possible profit 1600. My risk is the premium for the next 2 days. So you have these features to help your risk management plan. Okay, especially AvaProtect is nice if you expect over the next time period a lot of volatility. Then certainly in this example, gold could go flying up to 1950, or it could drop to 1850 or 1800. So high volatility, AvaProtect could be something that you utilize. Also on this platform, and we'll get into the charts here in a moment, you'll notice that for pending orders, it makes it simple. If I'm buying and I want to buy from a lower price or a higher price, I don't have to say that it's a buy stop or a buy limit. There are different types of pending orders. On the MT4 and MT5 platforms, you have to know what those are. To buy from a lower price or to program a pending order to buy from a higher price, you have to know that one is a buy limit and the other is a buy stop. You have to tell the platform which type as you're programming it. Here, you just say, what price do I want to buy from? And the platform makes it the correct type of pending order for you. It saves time. Even if you already know what the pending orders are, it saves you time to prepare it. And it also, if you're new to trading, avoids confusion about buy limit, sell limit, buy stop, sell stop. You don't ever have to know those names. So very nice features on the platform. Now let's get into, we're talking about technical analysis today. So how can this platform help you with technical analysis? Well, it just so happens that all live accounts have free technical analysis built in under Trading Central. Once you open a live account, you'll see under Analyst Views, free signals, timestamps of when they came in, okay, based on platform time, I believe. And you have different currency pairings. You see it break down the technical analysis, the price levels, the entry points, exit points, the theory behind it. It's all there, okay? So these signals come in through the day, time-stamped, so you know how long it's been since they've come in, and you can switch categories, cryptocurrency, etc. Okay, so that's a nice tool that doesn't cost you anything. AvaTrade covers the cost of that as a premium service for all live accounts. And then you'll also see other things in the Trading Central that you can check out. Market Buzz gives you all kinds of articles for fundamental news, and there's an economic calendar, etc. Okay. Now, what is happening today fundamentally? Some optimism. I wouldn't say huge optimism, but some optimism. I have someone complaining they can't hear, so let me just type to them. I'm still with you, just typing a message. Okay. All right, so if anyone does have audio issues, please let me know. Now, so what we're looking at here then is some optimism in the headlines. European stocks rise ahead of the European Central Bank meeting, which is later today. Okay, it's a big deal. We will likely see large movement in European stocks, and also as we look at and indices, which obviously are made up of stocks, and we also will see movement in the euro. We already see the euro gain some strength leading up to this meeting. I think there's a potential for a pullback in terms of the strength of the euro, because you would imagine they're probably going to talk about keeping interest rates low, potential stimulus for the economy because of what's going on with the COVID virus. So I think this meeting later today gives great potential for technical trading, okay, that we can set up even now for potential movements. So we'll have a look on the charts at the euro pairings. You see big announcements coming soon. Okay, you see 8:30 a.m. that's New York time. So be 1:30. So very soon, coming up with US dollar announcements. Okay, that's today. So if I refresh the page here, you see here manufacturing information coming, and employment number coming, and we've got interest rate decision in the European Union here. Okay, we've got big announcements on the New Zealand dollar as well. And here's the press conference listed. Okay, so very important to know that there's potential big news with the New Zealand dollar, with the euro, and with the USD. Okay, we don't know exactly what the news will be. We know when it will be, and that's enough when it comes to technical trading many times. So let's take a look then at the charts and see what's happening with some of these instruments that are related to the fundamental news we just looked at. So if you would, give me a quick okay in the chat box if you're still hearing me good and seeing my screen all right. Okay, great. I've got enough responses once again. Thank you. There's one person in particular that's complaining they can't hear, but it's obviously on their side. Okay, so we're looking here at the Nasdaq. Why is the Nasdaq going up? Excitement about stimulus. The tech stocks also in particular have been doing very strong, and the Nasdaq is driven largely by the tech stocks. So you see the rise. These are 4-hour candles. That is a rapid rise. Okay, and in general this is true. The faster the rise, the more likely the pullback. Okay, keep that in mind. So this is quite a rapid rise. These are 4-hour candles. Yeah, we're going to look at Euro USD. We'll look at crude oil. We'll look at gold for sure. Good suggestions. All right, so Nasdaq. We're looking at the Nasdaq going on a very rapid rise. Okay. In general, when you look at technical analysis, I'm going to outline some rapid rises. Here's a rapid rise. What happened after that? Pullback, right? Pullback. I don't even care what the news was. Rapid rise, pullback. Here's another rapid rise. Here. What happened? Pullback, right? Another rapid rise here. Rapid rise. What happened? Pullback. All right. You get the idea, right? So we see a pattern, and that's what technical analysis is about. In particular, the Nasdaq is pretty volatile. It reacts to things quickly. And you see these rapid rises followed by pullback. Rapid rise, pullback. Rapid rise, pullback. Rapid rise. What might happen right now? Intuitively, you might say, just looking at the pattern on the chart, maybe there's a pullback in order. Okay. Now, the fundamental news tells you why the market went up. Expected stimulus. Okay, excitement about the Democrats having full control of the House and the Senate and the presidency, and now they can put through whatever they want, and the Democrats tend to love stimulus and handing out money. Okay, and so and they've already said they want large stimulus. They want to go big. Janet Yellen, who's been picked to help head up the monetary side for the Biden administration, yesterday said, go big with stimulus. Okay, so this has got the markets excited, understandably so. Low interest rates, lots of stimulus being handed out to spur the economy on, etc. Now, if we then zoom in from these 4-hour candles and go to 30-minute, looks like today we've leveled off, right? It's going sideways pretty much all day today. The market's moving sideways, all right? No big climbs, no big drops. So there's a pause in the excitement. Now, the question is, what way might this move? And the answer is, we don't know for sure, right? We go to 15-minute candles and we say, okay, looks like a tight sideways movement. 5-minute candles, pretty much trending up and down sideways, even tightening. Look how tight this movement's getting. It's like a snake back and forth that's getting tighter and tighter and tighter. The movement is tightening. What has to happen eventually as this tightens? Tightening down, tightening up. The market's really getting pinched. What has to happen? It can only get so tight there, these movements, and then what has to happen? Yeah, exactly. There has to be some kind of breakout move, right? The question is, are we confident in the breakout move in one direction over the other? And so the answer is maybe not right now, right? There's excitement about stimulus. There's excitement about low interest rates, etc. But that seems to have faded. So the question is, if you don't have a particular direction in mind, then technical analysis is a great way to trade, because the fundamental news isn't driving your opinion right now. So then we start to say, all right, let's get rid of some of these lines that we drew. And we say, okay, we know there's potential for a pullback. We saw that. The technicals say there's a good potential for a pullback in the market. All it would take is one negative news story that was unexpected, and down would go the market. Okay, could happen at any time about virus outbreak being more, new strain of the virus, vaccines maybe not working as well as they thought, anything like that, boom, you could see a crash in the market, right? And we already saw the pattern on the 4-hour candles. Big climb, big drop, big climb, big drop, again and again and again. So we're poised for a potential pullback. And if that was going to happen, let me get rid of all these lines I drew, because I know they can cloud the vision. We'll get rid of the pattern that I drew. We see the pattern now. If there was going to be a pullback, where would I maybe take profit? I think here. Okay, you see this was resistance. And then once it went above this level, look at the breakout candle. That's a huge breakout candle. That's what happens many times when there's a resistance point. It takes a lot of momentum to break through, and there it is. What caused that momentum? The Democrats taking control of the presidency, the House, the Senate, the excitement about the inauguration and the promises of large stimulus. That's what caused this momentum. And so if we think there could be a pullback, that's a pretty good risk-reward ratio there. Meaning if you put your stop loss here above the all-time high, by the way, that is an all-time high for the Nasdaq. We could look at the Dow Jones and other indices and see the same thing. Put your stop loss above the all-time high and put your take profit before the first support level, which would be down here. And you can be patient with that move. Small risk, much larger potential reward. We're following a larger pattern that we've seen. And I can draw the slope here, right? Look at this slope. Look at, we could call it an alleyway. Top, it drops. Bottom, it goes up. Top, it drops. Bottom, it goes up. Top, it drops. Bottom, it goes up. Top of the slope, you expect maybe a potential drop. Okay, so where would you take your first profit if you expect a pullback, but not to be a sustained pullback? Just above the first support level, which is the old resistance level here. And so if I'm doing a market move on the Nasdaq based on the technical analysis and ignoring fundamental news situation, thinking that, okay, market went up because of stimulus, that hasn't happened yet, but now that movement is what we would call maybe cooked in, right? If they do sign stimulus, well, the market already went up in response to expected stimulus, so it's nothing new, right? Although probably if they get close to a stimulus deal, you'll see more excitement. You'll see more climbing probably in the markets. But I don't think that's something they're doing today, right? Or tomorrow. It's not imminent. So I think potential here, if you were going through technical analysis, potential is on a pullback here. So then maybe we sell on Nasdaq. You put a trade size that makes sense for your trading, your balance, your risk tolerance. And by the way, if you use the web trader to place your trade or the AvaTrade Go app, you can play with the trade size and it'll tell you how much you're risking, right, to your stop loss. So, and what your potential profit is. So I encourage you to use the web trader to place your trades if it makes it easier for you with your risk management. So if I'm selling on the Nasdaq, saying, okay, I don't expect a huge movement right now, okay, but there are some numbers coming in later today out of the US, some manufacturing numbers, etc. We looked at them before we jumped on the chart. There are like 4 or 5 large announcements coming that will affect US stocks, US major indice movements, okay? We don't know what those numbers will be. We do know that there's a potential they could miss the mark, right? So we then say, okay, let's take a shot. I'll put my stop loss above the all-time high. It would take good news to break the all-time high. We probably all agree with that. It have to be good news to break an all-time high. So I put my stop loss up here and I say, listen, if it breaks the all-time high, then I'm wrong about a more immediate pullback. I'll take the small loss. If I'm right, especially if those numbers later today come in bad, then wow, I'm probably in for a nice profit, and it could likely reach this first support level. So I put my take profit maybe down here. Okay, now my potential profit is like 3 or 4 times my risk. All right, because of our technical analysis setup. And maybe I'll get rid of this line and move my take profit just above the support. Okay, remember this was our support line right here. The old resistance, this was a breakthrough momentum. Many times the faster something goes up, the more likely it is to have a pullback. That was a rapid rise. We saw that pattern again and again back here, rapid rise, pullback, rapid rise, pullback, rapid rise, pullback. So the pattern is on our side. The entry point is opportunistic. If it drops, we're not risking much to go after a larger potential profit. And maybe the fundamentals are on our side too, because there still is some doom and gloom out there regarding the COVID virus and the spreading of it. It's not all gone. Really, without the stimulus, the markets would not be doing well at all, if you think about it. The markets are doing good artificially because of stimulus and unusually low interest rates, etc. So a lot of times people will say, oh, well, something has a silver lining. This actually is the opposite. The shiny silver's on the outside, and the inside is, ugly when you look on the inside of actually what's going on with economies around the world, because there's a lot of industries shut down, still a lot of quarantining, people not all the way back to work, etc. So a lot of reason why this could come to fruition fundamentally. And obviously, technically, it's a nice entry point. We could be wrong, right? So manage your risk. On moves like this, you need to be right maybe 1 out of 3 times to profit. 1 out of 3, you'll profit with this type of setup. So you don't expect to be right all the time. Right now, we're looking at 4-hour candles. So we're seeing more than just the day, right? We're seeing the weeks, days, and days worth of information. These are 4-day candles, right? Every 6 candles is a day. All right, so what then are we looking at with Euro USD? That was a request. So let's look at Euro USD. European Central Bank is having a meeting today, a statement, interest rate decision, all of this going on today. I think the odds are, just like in the US, that the European Central Bank is going to talk about economy-friendly policies to try and get through this COVID crisis. So I don't see the European Central Bank coming out and saying we're going to raise interest rates, we're going to be more fiscally conservative. That would cause the euro really to strengthen like crazy, right? But I think probably the policy that they're going to talk about today will be in the same direction as the U.S. policy: low interest rates, potential, stimulus, bond buying, whatever it might be to help prop up the economy. And so that's not going to cause a rapid strengthening of the euro, right? Most likely. So the euro USD, I view right now as a weak horse against a weak horse. I don't like the pairing, honestly, but it was requested. So let's look a little closer. I do see a resistance level that the movement has reached. Okay. You see, this is support. And for those of you that are new to support and resistance idea, you see a classic example here, 4-hour candle. So this has been going on for days and days and days. Price hit here, went up. Price hit here, went up. It's not a coincidence that then when the price hit the same spot over here days later, it held and went up again. And it held here and bounced up again. That is an important price level. It was a level of support. All of a sudden, it broke. It broke that price level. Now it's up and down right at that price level, trying to decide, will I go up or will I go down? It's an important price level and it's stuck on it. What's it waiting for? It's waiting for the European Central Bank talks today. You'll see it drastically either break through and go up or reverse and go down eventually here. And that news conference today could be the impetus to cause that. So if we zoom in then on 1-hour candles, we say, wow, it really is stuck right at that important price level that we drew here. And it doesn't know which way to go. So how do you handle a situation like this? You say, okay, let's find a less significant support or resistance level. Here is a support level. It's not that far away. And here is a resistance level, not that far away. Okay, this is resistance. We see here, and this is support, where the price went down and bounced up. This is where it went up and bounced down, which matched this spot here. It hit and went down. So if the price goes above here, then boy, the European Central Bank must have said something that's really good for the euro. And if the price drops below here, then the European Central Bank probably said something that's bad for the strength of the euro. So what kind of pending orders can you place so that you don't have to guess which way this movement will go? You wait for a breakthrough movement confirming momentum in that direction. What kind of pending order could we put that would buy from this price if it breaks through the resistance, and that would sell from this price down here if it breaks the support? Buy stop and sell stop, right? Those are the pending orders that buy from a higher point, buy stop, or sell from a lower point, sell stop. Now again, in the web trader, you just say sell from this price, and you could enter this price right here. Buy from this price, and you enter this price right here, and boom, your pending orders are ready. On the MT4, you actually have to pick, change it from market execution, depending. We need to say buy stop, and then we need to program the price up here that we think if it hits 1.2160, that boy, the euro's on its way to strengthen maybe, right? 1.2160, right? Buy stop. And then I put my stop loss back below there, maybe 1.2140. Okay, place. There's my pending buy stop. If the price breaks through all of this resistance and hits this price up here, you see there's my price line. If it hits that green dotted line, then I'm in. Here's this red line I drew is the resistance. If the movement breaks through all of this resistance and hits my green price up here, my entry price, then I'm in on a buy with my stop loss back below that resistance. And the potential profit, we could put a take profit way up here if we wanted. right? You can program your take profit at the first resistance, about 4 times potential profit compared to risk. And all the while waiting for the breakthrough to confirm whatever it is the European Central Bank is going to say, right? You don't have to guess. You don't have to trade right now and say, I'm going to sell on the euro because I think they're going to talk about more stimulus. What if you're wrong? Why guess? You don't have to guess. So wait for whether the move breaks through. That's a buy stop. And obviously, we also then could go through the same process, prepare a sell stop pending order down here below this little support. If the movement comes down, breaks that support, and hits your sell stop price, then likely it was bad news for the strength of the euro with the European Central Bank conference, right? So then you'd be in on the sell, and you put your take profit down here near a support level. Again, low risk, high potential reward. Very simple. Knowing that this big fundamental news is coming, do your technical analysis to find where would it be a significant move that I would be convinced that, wow, it must be good news for the euro or bad news for the euro, and you program your pending order to get in if that happens. Okay? So this is the brilliance of the stop pending orders. They're confirmatory pending orders, waiting for a small resistance level to break or a small support level to break right around the time of large potential news coming. Understanding that if those levels break, probably you're going to ride the wave because it must have been big news. All the while saying, I could be wrong, limited risk, larger potential profit. Okay. Now, why did I say I don't like the Euro USD pairing for this strategy as well as maybe the Euro JPY? Because the USD is also weak right now and has its own news going on. If we do Euro JPY, okay, if it's good news for the euro should climb. If it's bad news for the euro should drop. And the yen is more neutral in this case because it doesn't have these large announcements coming right at the same time. There are different levels, John, for support and resistance based on the time frame you're looking at. But what we looked at, let me delete all these lines. Let's go through it one more time on this, and then we'll go to the next instrument. Requests were on gold and oil, so we're going to look at those next before we run out of time. But you see here that this price level went up here and dropped right here. It hit and dropped. Then it broke through, came back below. Then it hit that same price level here and dropped, right? It hit and dropped. Same spot as here. Okay, it's like head and shoulders here. Shoulder, head, shoulder. The shoulders are the first resistance level. This is the second resistance level. You see, I'm not going to enter on this trade unless it breaks through this first resistance and it goes up and breaks the second resistance and hits my buy stop price to buy. So I have 2 levels of resistance that need to be broken before I'm convinced that the euro is on an uptrend. Okay, so where's the support level? Right here. It hit and went up. So if this comes down to this same price and breaks below it, now it broke that support, and maybe that means there was news that should weaken the euro. Okay. What is the value exactly? This line right here, you're testing my eyes, 1.2116. I believe I'm seeing, and I did have my contacts adjusted recently. But in any event, as long as you understand how to find the line, I don't want you to necessarily use the exact price that I'm saying, right? I want you to understand the strategy and to go in and draw your own lines. Find the support level that you see here. It went up when it hit, and same spot here, it hit and went up. That's twice. Here, it bounced up, same price, it bounced up. You should see this, like I kind of alluded to earlier, almost like music notes, where they're going up and down at the same level, and then there's a breakthrough, and then it comes back. The tempo changed here. Then it went back to the same tempo, hitting here and coming down, hitting here and going up just like it was here, okay? You see the pattern. It takes something big to break that tempo. All right, tremendous. So let's look then at gold. That was a request. Why is gold climbing? We already talked about it, right? US dollar is weak, 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 right? The reason the US dollar has been weak is because of lots of stimulus, right? That's why you can have US dollar very weak, but US indices going their all-time highs. Stimulus. It causes both to occur at the same time. And also, you'd say, well, why is gold near all-time highs at the same time that the Nasdaq and Dow Jones are hitting all-time highs, and other indices around the world? And so the answer would be stimulus, right? Stimulus drives up the indices, and it also scares people into buying gold as a safe haven because it's weakening the currency. So people who would normally invest in the USD are buying gold. So gold's going up with the markets in this case. And so we see gold at a nice high for the day here. If we go to 15-minute candles, look at the resistance that formed. Look at that resistance. Resistance, resistance, resistance. If any fear hits the market right now, and it's weird because you say, well, shouldn't fear drive up gold? Not exactly, because what's been happening with fear is the US dollar has been strengthening, helping to pull gold back down. As the markets pull back, so has gold in the past months. So if we're expecting a potential pullback on indices, no guarantee that it'll happen, but if you were, then you might say, could be an opportunistic spot to take a shot at a pullback on gold. Okay, we see not that long ago, it was right down here. Okay, here's our support price, 34 or so. We see gold just came down here yesterday and then rapidly climbed and ran out of steam. Okay, certainly gold could keep climbing, but you also could take a shot with limited risk, putting your stop loss above here, above this high of the day. If it breaks through, hits your stop loss, okay, small risk, no problem. I can sell, I don't know, here's 10 ounces of gold. I can have a small risk above the high of the day. If it breaks through, then fine, I'm out. My take profit, I could have at the first support level here. Okay, this is my first support level, maybe to take profit. So here's my take profit right above that. Okay, potential profit about 2.5 times what I'm risking. Again, you only have to be right less than 50% of the time, and you profit on these technical strategies with resistance levels looking like after a rapid climb, the momentum ran out. We see the resistance forming and the price consolidation, the potential for a pullback is there. Okay. Now, what we're seeing here, we just did. Lolu, you're asking why wouldn't you short in this case? We just showed an example of shorting gold here. We were shorting the Nasdaq. You see here, it's up $54, right? If you're a scalper, you say, okay, I'll take that. Just made your $55, right? And so we were shorting the Nasdaq, expecting maybe a pullback. There it was going. Many might just leave that on and see if it'll carry to that support level we drew, right? Could continue through the day. Same with gold. It could pull back. Why is this the take profit? Because here's the old resistance right here. You see it came up and dropped. And then once it broke through, that became support and up it went. So if there's a pullback, the first resistance or first support level is about here, okay, on the 15-minute candles. And that sets you up for a nice, easy return. Gold could still, by the way, be on an uptrend because of stimulus and inflation in the US. So gold could still continue up to 2,000, right? But it doesn't mean there won't be a pullback before then. And since we're doing technical analysis, we can say we understand why gold went up. Inflation fears with stimulus. Now we also understand the technical analysis that when we see a large climb, we see a pullback like right here. A large climb, a pullback. Here's a climb, consolidating price, we likely could have a pullback. Okay, so it's a combination of weaving your way through the technical analysis, and also understanding the fundamentals of why those movements have occurred. All right, everybody, I think this is a good place to stop. We didn't have time to look at the European indices so much, but there's some excitement out of the European Union. Which way should you expect European indices to go with stimulus potentially talked about when the ECB talks today? If the European Central Bank talks pro-growth policies, low interest rates, etc., you probably could see European stocks rise, right? They could go up. So take a look at some of the indices that we didn't have a lot of time to look at. Maybe we're looking at the DAX, and you're looking for a price that if it pulls back, you get in off the first support level, right? Here's a support level. So it tested it once, it went up. It tested it twice, it went up. If this pulls back to a price you like, the fundamental news says probably buy, right? So use your technical analysis, whether it's US indices, whether it's the DAC, the CAC, anything. This already pulled back, didn't it? We're looking at the CAC 40. We see a pullback in this price. Okay, maybe you see a price down lower you'd rather buy from on some of these. I think the DAX look nice. You could look at the FTSE, whether it's UK or EU indices. I think they move a lot of times together. So we could be looking at a lot of these, and some of the more obscure ones, maybe like the Spain 35 or something different. Okay, so a lot of opportunities out there with the news that's coming with those announcements, the European Central Bank, etc. All right, everybody, thank you for joining. Good luck with your trading. Our next session will be next week on Tuesday evening, 6 p.m. UK time. All right, bye, everybody.